How to get a real estate loan, part 3. Hi, my name is Damon Oubre. Welcome to the Red Loves Real Estate YouTube channel, the home of Real Estate Damon, and the home base for real estate solutions and education. Now, if you're interested in knowing the other important factors that determine you being qualified or approved for a mortgage or real estate loan, go review the previous videos in this playlist. So number 2, the second most important thing that the banks are looking for when you're applying for a loan is the relationship you have with the bank or lender you're applying for. So this is one of those unseen things that a lot of people don't really understand. The bank is kind of like you in a sense. So if you have a brother or sister that you loan money to and they always pay you back, how likely will it be for you to loan money to them again? Highly likely, I would say, unless you just don't have the money. Now, if you have a brother or sister who, when you loan them money and you pretty much got to put out a court order to get it back, it's highly unlikely you'll let that person use money again. So the banks are similar in that aspect, where the banks look at your relationship with them and they say, this person's borrowed money to get a car before, they borrowed money to get a house before, or whatever. They took out a personal loan, and their track record for paying us is great. They've got credit cards, they paid all these things back on time, there's no red flags. You know what? We can move around some things for this person because we trust them. So the obvious understanding of this is to say, if you've been with the bank for a long time, go ahead and apply with that bank first because you've had a relationship with them and your percentages of getting qualified are high. Now, one thing that's not really talked about that can get you in good standings with a bank, and they will literally offer you credit cards and you go apply for a loan and they'll be like, how much you want, is what is your deposit frequency and how much that deposit is. So if you're putting $2,000 to $4,000 in an account every month, and this has been going on for the last 2 years, banks love that. They know that if anything, there's a consistency of you knowing how to get money and it's going into their account and they're able to lend that money out to other people and make money. So long story short, they making money off of you just by you depositing money into the account. And they see that you are able to find ways to get money, and that's the most important thing. Whether it's a job, whether it is from a business, banks love to see you making consistent deposits monthly or bi-weekly. Now, if your best relationship with the bank happens to be with a bank like Chase, Wells Fargo, or Bank of America, then you're probably going to be looking at getting an owner-occupied loan only, unless you have something else, which is actually the number one thing that banks look for when you're applying for a mortgage. And you'll have to wait until that video comes out, which it'll come out soon. Click the bell, make sure you're notified so you can know when I drop that video. Back to your relationship with the bank. The best banks to go to and build relationships with are obviously credit unions, because credit unions use the funds provided by its members. So they're not borrowing money from the Fed, which makes it a lot easier for them to lend money and not have to deal with the rules and stipulations of these huge financial institutions. And also, if you build a relationship with a smaller bank, it's highly likely for you to get an investment loan. The banks see investment property loans as higher risk. So you should always plan to pay more in interest and a few more loan costs involved or associated with getting a commercial loan or an investment loan. The underwriting process for a traditional bank compared to a credit union is also completely different. Underwriting, again, is how banks make sense out of lending you money. Whereas banks have these like 10 commandment pillars that determine if they can let you use money or not, credit unions tend to be more flexible. So the number 2 most important thing when trying to apply for a mortgage or a real estate loan is what kind of relationship do you have with the banks? And this is very important, guys. This is number 2 on the priority list, and I think if more people understood that, it'll be easier for you to get approved. So start building a relationship with your bank today. I would say a good credit union, and you'll be waltzing out there with a pre-qualification letter on to buying your new real estate property. Make sure you click that bell so you can find the #1 item that controls a bank's thought process when lending you money for a mortgage or real estate loan. Please share this information, and as always, if we have the will together, we can build together. I see you in the next video.